Good afternoon, good morning. This is Mark Johnson from Loyalty360. Hope everyone's happy, safe, and well. I want to welcome you back to another edition of our What We're Seeing, What We're Hearing podcast, Videocast. It's our weekly podcast and videocast where we explore the topics, trends, and best practices that impact a brand's ability to drive customer channel and brand loyalty. Loyalty360 has a growing brand membership community, and we meet with them on a fairly regular basis, 1 to 2 times a week, where we have an open discussion around topics pertaining to the industry. These allow for peer-based feedback and an open discussion on these specific topics and how brands may be viewing them, but also addressing them. During the second week of July 2023, we had a meeting to discuss how brands are looking at co-brand and private label credit cards. There's a great deal of opportunity within the customer loyalty industry pertaining to private label credit card and co-brand offerings, even as there seems to be some changes within the industry, as a recent report titled Private Label Credit Cards Still Relevant But Losing Luster from Javelin Research and Reports elucidated some of the challenges facing brands today. Here's a summary of what we heard in the meeting from the brands. Would love to know how you may see these challenges and how they may line up with some of the things that you are seeing from a customer loyalty perspective as you obviously run similar programs. There were 6 areas of focus for our members in the discussion. 1 was around best practices, 2 is around strategy challenges, 3 is how to leverage potential new technologies, 4 partnerships, 5 is the state of merchant-funded offers, merchant programs, and 6, what to ask when evaluating the program. When we look at best practices, brands want to know what they should be considering when going through a renewal process. 1, they also are very interested in new offerings in a fintech space. There was discussion around some of the offerings in the fintech space that allow for a more traditional, should I say, an untraditional approach to credit scoring that may not be part of a FICO score. And the last thing is, how do you rebuild relationships with the issuer if it may have lapsed or if it may be even strained, the issuing bank and the network? Strategy challenges. There were a few strategy challenges brands were having. A big discussion around customer value propositions, how to understand what the current customer value proposition is and how do you get it right. And when you look at your CVP and you have a multi-card offering, how do you determine the best reward product offering for each card? And should you work to include different types of purchase opportunities, maybe everyday purchases for different cards within your profile? 3, how can you leverage the issuer's network? There's a lot of marketing money and tools that brands can be leveraging within the issuer and the network, but how do you get access to? So there was a great deal of concern and interest in doing that. And 4, how do you re-engage customers who may have gone dormant? Number 5, when it looks at strategy challenges is, what are the best acquisition strategies, especially for an early stage and a mid-stage loyalty program offering? And should you also consider doing a consumer study with your issuer? If so, how do you do that? And what if you don't feel the issuer or the network are sharing enough data? What is the right amount of data and insight to expect in that relationship? New technologies. There was a great deal of discussion around new technologies, program churn when moving between issuers. There was discussion around some technologies out there that allow those who have subscriptions to move the program from an auto pay perspective more seamlessly if they're potentially moving banks. And then there was a discussion around second look cards. So those who may not have enough credit, the right credit for a no fee card proposition or for maybe a higher level credit card offering, how should they be looking at second look cards? And then what are the value propositions there? How do you manage the different thresholds within these different programs? There was a discussion around Spirit Airlines has moved some of their program to Mercury Financial for their second tier, the second look card offering. Because there's a belief too, if that someone doesn't get approved for a private label credit card offering, co-brand offering, it can have a black eye or create a black eye for the brand. So there was a concern about how do you manage that. Partnerships. Big area regarding partnerships within our industry. No surprise that private label credit card and co-brand is part of that. What can the issuer do to help them with partnership opportunities? And how do they make the partnership opportunities unique? Not affiliate based, not cookie cutter based. So how do you manage that? The next discussion was around merchant funded. What is the state of merchant funded credit card offerings? Brands really want to know how to manage that. And there's an issue of addressing the consumer understanding and tying the transaction back to the bank to the issuer, so they can become more active with the merchant funded offers. Big challenge with regard to reporting, attribution, and potentially margin compression within the merchant funded industry. And then lastly, there was a discussion when you're evaluating the program, options or things that you should consider if you are at a pre-RFI or RFP stage. Do you use a consultant for helping you evaluate the program? Many believe they should potentially leverage a consultant, and many were in the process of working with a consultant to evaluate options of potentially moving their PLCC or co-brand card. And how should you focus on or be focused on getting information, insight from the issuing bank or the network? And then when you look at your consideration set when moving the program, how do you do that? How do you evaluate that option? Should you be working with the issuer? Should you be working with MasterCard, Visa, Amex, or Discover on the network side? A great deal of interest around that. And then when you do decide to move a program, how do you deal with and manage attrition? If you are switching an issuer that may have an increased fee, or the customer value proposition may not be exactly similar to what it was before, how do you manage that? And most importantly, how do you talk about that to the customer? And when you look about the migration process with the customer, how and when do you start talking about that? As you bring on the new issuer, how do you start getting the customer ready to know that they are going to be seeing some changes in the program, that you're moving to another issuing bank, and then to allay any consternation they may have with regard to the CVP? And then last question is, if you're going to do a market discovery, how do you do that? Do you do market discovery and program discovery with the issuer, with the bank, with the consultant, and how do you effectively manage that? Again, these 6 challenges or opportunities brands are discussing are really looking at some of the challenges they're seeing. So hopefully you as either someone who helps strategy, help those on the strategy side or the partnership side or on the technology side have some responses to this, or if you are a brand seeing similar changes, we'd love to know more. Thank you everyone for joining today. Hopefully you found the opportunities regarding co-brand and private label credit card helpful and advantageous. We'd love to know some of the challenges that you're seeing. Please make sure to subscribe to the Loyalty360 video series through our YouTube channel, and also our podcast through Apple Podcasts or Spotify. And looking forward to having you back on our next edition of our What We're Hearing and What We're Seeing podcast. Have a wonderful day.